You're listening to the Valley Current.
As a professional in this business, you don't want to cause any runs on anything. So what I'm about to say shouldn't cause any worry. It's very long tail risk is that U.S. Treasuries could freeze temporarily if everyone rushes to sell them for some reason.
Right.
If you had like a large sovereign wealth fund.
Or China, who we have a major arm wrestle with right now in Silicon Valley because
there's some guys who follow that level and they're saying, yeah, that's your risk there. So all of us just need to be inoculated that there's potential for these little things out there and be a little humble, recognize the potential risks. If you have clients who can't handle the risk, don't take the money. Don't make the investment.
Right.
But if you do your homework and go in with the right folks. So yeah, I'm actually going to be starting a fund soon, or maybe go the old, separately managed account route, whichever makes the most sense, and maybe even find partners in it and start looking for the next insurance.
Yeah, I mean, it sounds like you've got your eyes on the prize, and the problem right now is I think a lot of people are in fear, and I would imagine that silver and gold will pick up as people start thinking that that's the safe haven for where you put funds or where you put money. But I don't know whether that makes any sense or that's kind of goofy. Obviously, there have been people for a long time, gold bugs and silver bugs and platinum bugs and metal bugs, who think, you have to have it in something safe. I don't know that they think cash is safe because...
The question with gold, can you carry your gold to the border? That used to be the whole idea, is that you own gold in case everything stopped and you had to make your own economy. That was like one of the first sort of sell points long ago. And then you get to this idea, well, I'm storing gold because it will go up faster because dollars will have to print against them. Then they took away the gold, backed by gold.
Right.
Now, you have a situation now where people think that the gold will store value faster, but still, you have storage costs that are higher than some of the U.S. Treasuries that you can get. You have other things that might fit that. You could buy a gold miner. Mm-hmm. Gold miners do have their own problems. So they have political problems in countries where mines get taken over. Mm-hmm. And again, unproven reserves at times, and pollution, et cetera, and other costs, legacy costs that they'll have to catch up to someday. Right. You have to be moving like a shark to a good degree. How is that passive index fund working? Well, let me tell you this. One of the biggest owners of SVP wasn't it Vanguard? Mm-hmm. That's passive funds.
Right.
Go through that. So you look at the S&P and you kind of have a sense right now that a lot of them are not doing so well earnings-wise, and margins are getting compressed. And we're going to see some tough time. So, the flaw of I'll just bet on the average, which is that S&P cheap index fund, is you may have a lot of difficult situations to make money. Maybe over the long term, it'll be great because the U.S. has been great. It's something to believe in, which is, as long as we continue with the rule of law, is a good idea. But I'd rather go out and pick stocks and have some ability to be nimble when I need to be.
Right. So how do you look at, I'm kind of curious, how do you look at this EV revolution that's happened with Tesla capturing a lot of people's attention? Obviously, its stock has come down a bit from where it was at the very height, but do you think we have kind of a major paradigm shift where, internal combustion engine cars are going away and Tesla is going to be the premium brand, the way we've historically thought of Ford and General Motors and others as being the premium brands? You must be following that story too, right?
Yeah, I'll say this. I'm biased by the fact that I have a will. I'm sorry. But the best trade for me, undergraduate, was natural resources, UC Berkeley. So I can go different places, you could say. And well, it got totally dirt cheap. I had to really think about this to some degree and find all the experts again and just review a ton. And right now, I'm very excited about what EVs could do, but I'm also really just horrified by the pollution that they do create when you create them. And I really think, though, with newer battery technologies potentially coming out and making the existing batteries a lot more useful for a lot longer time will be awesome. I just have a hard time betting on one. I recently talked to a Chinese company called Goshen, and they literally asked me, like, how do we get into the US? I'm asking the wrong guy. How do we diversify our issues with batteries and the new legislation to support EVs, et cetera? And so, you know, one, I don't like China, period. I like China. Most of my partners in business have been Chinese, actually. We're the same thinking often, but communist China and I disagree. And many of those companies are controlled by the communists. So just an aside there, sorry, but when you invest in technology, it can be a fool's game to bet on the end customer, and a lot easier to bet on the shovels and the picks they're going to need to go dig their gold. There's so many VCs now, and you know, understand this, that they can spread their money to many different types of companies. And there's been a lot more openness to these larger EV companies to get bigger and bigger through the public markets, et cetera. That you kind of just say, is there a niche? And is there a niche against the incumbents? And you have to understand the incumbents, you know, they get a little bit of government kickbacks here and there to stay in business.
Oh, yeah. I mean, Tesla's gotten a huge set of subsidies, and they've just opened up their network to all other EVs, their charging networks, and they've got a huge dollop of federal money for doing that. I don't know what the Tesla owners, I own a Tesla, I've had one for many years. I have the original version of the S that they grandfathered or said you're going to be able to have electricity for free for the life of the car. The life of the car could be 1 million miles, depending on how hard you drive it and how much you overcharge it, if you avoid overcharging it. And so conceptually, that means the fuel cost for me for that car is basically zero. And so from the total cost of ownership point of view, you can't beat that car, assuming you actually can run for 1 million miles. And there are a few people that have run their Model S's for 1 million miles on the free electricity that's at these charging stations. But if the charging stations are overcrowded by other EVs, like from GM and Ford, I think that's going to frustrate some people about, hey, I have to wait a long time to get a charge, right? They'll just do their charging at home and kind of accept whatever that cost is, maybe with a solar roof or something, right?
You co-invested with the government, and they gave you a free ride.
Right.
Thank you.
Exactly. Yeah. Yeah, no, I get it. I get the point, but I think to myself,
and it runs out. I mean, they got to start at some point making money. They're ahead of everybody in quite a few technologies. I recently visited one of their junkyards.
Oh, a Tesla junkyard?
I caught with a friend to go through the process of how does a Tesla get fixed?
Yeah.
You go to, you remember your, so harking back, like as an investor, I want to be an operator. I want to understand how things do work and the costs and et cetera. And when they say that they're going to eventually bring down costs and limit, you kind of want to go look at what's still ad hoc here.
Right.
What's still waiting for automation? What still depends on that one person if they left? That one person who does the rivet really good,
right?
Or that weld, welding is just in how much can robots take over, et cetera. But you go to a Tesla junkyard, or shop, and you go through that situation, you might think again, the conveniences of having something that's made it in a standardized way. It's a company of innovation, and that's what people love. They buy that. And hands down, hey, congrats. there's a little that goodwill over at Tesla has some value by Elon Musk. So, if things get tough for him and the backers of Tesla, the equity is going to continue to take a hit because their costs really need to come down more.
Well, a lot more. Well, they think they're going to automate the automation that builds the factories. Like they're going to be able to punch out these factories with robots that then build the cars, then build more factories, then build more cars. I mean, I don't know if that sort of perpetual motion machine can really be created, but that's the theme of this Plan 3, right? They made this big announcement that there's a big plan to eventually have the automation robots create the robots that create further cars, that create more demand and get the price down and go head to head with China. Of course, Apple's been pretty successful going head to head with China. I mean, the Chinese smartphones have not really predominated. You could say it's sort of a two company war between Samsung, which is a South Korean company, and the US, which is Apple. But there's no real Chinese competitor that we know. Now, maybe in China there is, and it doesn't seem as though they've been able to knock off. But I think China is going to enter with some pretty low cost electric vehicles that will probably give Tesla a run for the money. At least that's my sort of sense of things. I could be wrong about it. I mean, maybe that's some of what's going on in constraining the semiconductor flow to China, which is to sort of stop them from invading what is really a big industry in the US, right? Electric vehicles, not only Tesla, GM, Ford, basically every company that builds cars in America is going to be building EVs in one form or another, maybe even required by law to do that, right?
I agree. But I'll go back. I'll say one of my favorite companies here in the Valley, and obviously there's analog-like tech. It's kind of the boring, basic, maybe plugs in at the side of the computer, that kind of tech, the transistors on the board. And then processors are over here. And then maybe things that design processors are, over here. It's just how high tech are you dealing with? And a car is A to Z, fairly complicated. You're making all the stuff in between. You got the software. Well, one of my favorite companies was Cypress Semiconductor.
Right.
You know that? Now, my favorite, we used to love this when a friend of ours used to show an annual report, and it would be, here's the annual report of this company that did something bad or good, etc. This is like the last one before they did something great, whatever, or bad. And on there, one of my favorite ones before they were purchased, they showed a car and all the different little programmer little processors and other parts that they put into the car. It was everywhere, all the way from the mirror to the front to the back. The cars turned into technology.
Right.
And because they were, they had both the basic stuff that could get stamped out real quick, and then the custom stuff will do for you, and then the super custom stuff will have somebody at the factory. They were winning the game.
Right.
They were purchased. That was sad, but that was the way to play, is to find something like that, because it's not just that one car company. You and I just talked about all the different risks that could happen in Tesla. Well, this is a technology that goes into all the EVs and the existing gas. So I'm not even making a guess as to when the move to EV will happen. I am making a guess that people will buy cars. I'm making a guess that the buyer won't be aggregated by some robo car company that you can call up.
Right. So who bought Cypress? Because I remember it when T.J. Rogers was running it as a CEO, and I remember his book, No Excuses Management. I didn't even know that they had been bought. I thought they still were a public company. Have they actually been bought by someone?
you could do a whole show, and I bet he would come on for you.
Yeah.
And you may want to have the other side. It was a German company that bought it, and he had given a little bit of the reins away to some degree, and he was forced out.
Really?
And he was the kind of guy you wanted, who had been in the Valley, especially in hardware. They'd been through a ton of cycles with a good reputation,
right?
Money, he'd go for it,
right?
And when he said to his clients, "We'll figure it out," he had it, and he had a ton of good relationship people. I just saw one of the old sales guys, I think yesterday, and he's doing well.
Mm-hmm.
Real assets, good people,
right?
Company.
Right. So, yeah, I mean, it's a real company with a great management team and a great CEO. I frankly thought he was still CEO. He must be getting into his 70s at this point, or maybe even older than that. And that brings us to the final topic I have for you, which is, how do you think about your work span in conjunction with obviously your health span, which is obviously great, and your lifespan? Are you wanting to do what you're doing for the next 20 years? Because if you start a fund, you're definitely going to have to start thinking like, hey, it's a long-term gig. Believe me, it has a long cycle to sort of wrapping up. Getting it started is a lot easier than sort of winding it up. But tell me, how do you think about it? Because you're managing money and you must have accumulated a fair amount at this point to sort of think about your own freedom. But give me the big picture on how you think about work span versus health span versus lifespan. They're usually not all aligned to get to 100 years. Maybe if you're lucky, you get to your 90s. But you have good genes in your family. But tell us what you think about it.
Yeah, I'll say I've been lucky in some senses, but I think second memory in life was watching my dad have a heart attack, and I didn't realize at the time. And so we took a radical stance in the family to just eat healthy and try and I don't, not all the time.
Right.
And so I think along the way, you learn that the body doesn't just have muscles, it has a brain, and the brain does need exercise. And that's what you do all day at work that kind of helps too. We're learning more and more about dementia and other diseases that you want to keep learning. So whether you're working or not, you've got to find, you should find a lot of things that keep, you reading and
right. You want your curiosity and creativity to continue to operate in whatever you choose to do. But choosing to sort of manage other people's money is kind of a high stress. I mean, look, choosing law and litigation is a high stress business as well that I do. And my wife tells me all the time, look, if the case has any hair on it anywhere, just forget about it, like at some level. Of course, all the cases do. They're never perfect cases, and they're never perfect clients, and they're never perfect judges, and there's never a perfect jury. Like, go down the list of perfection, and you just won't find it in this life. So at some level, you either accept the stress or you don't. And I know some friends of mine who have retired relatively young. I mean, they got to about 62 years old, and they said, that's enough. I'm done. I'm going to die with zero. There's a great book by a guy that recently came out called Die with Zero. I don't know if you've seen it. I'll send you the link to it. There's an oil and gas trader in Houston that basically said, starting in his 50s, he was going to start giving his money away and throwing big parties and inviting people on his yacht and doing a bunch of stuff, or renting a yacht and inviting people to party on it with him, that sort of thing. And his view was, at some level, the mistake we make in America is we accumulate this wealth and then others fight over the division of it. And so we're much better off giving it away earlier and expecting to die with zero. And his big theme as a money manager, or as a guy that does investments, is you should get started early in thinking through that process as opposed to continuing to accumulate. So I'm kind of curious how you think about that.
All right. I wrote that down. Die with zero. Well, first of all,
His name is Bill. His name is Bill Perkins, and I'll send you the link.
Yeah.
You know.
Yeah, no, I've heard of Bill Perkins. You've got to sleep at night. I picked value investing so I could sleep at night. Growth is it's fun. You have to always be on. I actually start the work week now. So hey, it's Sunday. Guess what's coming out? Headlines for Wall Street Journal will be out around about 11 or so, but they're already coming out right now. I'll check in then.
You stay up. You stay up until 11 at night every night to pay attention to
tomorrow. Not every night.
Okay.
Sleep is important, but Sundays can get very important. And then times like this, I've done back-to-backs where very little sleep overnights and just getting up to go. It's I don't literally have like meals ready to eat here.
Yeah.
A lot of stuff that's been delivered. I've actually made some social commitments during this time just to kind of, stay outside.
Right.
But was it Andy Grove said, only the paranoid survive.
Right.
Right. But at the same time, how did he die? It's cancer or something.
Right. He wrote a book about the decision making about his pancreatic cancer. Yeah. It's a famous book.
Sorry, it doesn't come out, but
right.
But you have to, in order to like deal with this. So find a job where you can take it to the rest of your life for some purpose, and do that at the same time. Continue to exercise if you can, and in the world of value investing or investing itself, read things that inoculate you. Can't actually hold this here, but this is one of the better books written. The Intelligent Investor by Benjamin Graham.
Oh yeah, it's a famous book. It's a very famous.
And it's just no numbers. Mm-hmm. It's just here's what's happened before. Don't get caught up in it, and be careful.
Right.
Don't put all your eggs in one basket.
Right. Simple things. Simple block and tackling, which you probably would say in the wrap up, maybe the Silicon Valley Bank's management weren't doing what you would say would be basic hedging techniques, basic risk management. I mean, I'll note that KMPG signed off on their latest financials like less than a month ago. And that's probably going to result in another class action case against them, because somewhere in this, maybe there needed to be a going concern warning or some other kind of alert that something wasn't quite right there. I mean, we'll see what plays out. But
they didn't have a chief risk officer for a little bit. She just got put in the role, and things are moving pretty fast.
I hear you. So tell people how they can reach you, so they can come to your website and come to your email and phone number and all that.
Mm-hmm. Well, you can reach me at Will Gilmore on Twitter, or I'm William F. Gilmore on LinkedIn, or through Jack. Usually, it's better through referral anyway.
Obviously. So what are you doing? Are you regularly tweeting, or are you responding to direct messages? I know people use Twitter a variety of different ways. When you start to hear from me on any social platform, and often I delete stuff in the past, it's usually around bad events, because I feel it's like at the point of too many people are going to get hurt. I'm going to gain out of this somehow, right,
or at least sidestep. It comes to the point of kind of a duty in society to say, as an adult, here are the risks that are out there. I know it. I've lived it. And so you'll see a few things that I'll tweet and I'll post on LinkedIn. And so, yeah, if there's like-minded people or people that are interested in what I do, please reach out. So.
But you would say, the one thing I'm sure you would say is your time horizon should be like other value investors like Warren Buffett and Charlie Munger and the rest. It's typically a 10-year, I mean, it's more than 5 years, I tend to think, kind of time horizon, right? It's not this quick Tesla kind of, hey, let's
thank you. Right? That pretty much qualifies the people who don't fit. I was recently asked by someone who has hundreds of millions in the situation. And the trick question to the gatekeeper and getting to do some consulting there was, can you make this person 3 times their money in 5 years? And I said, no way. I will not guarantee anything.
No, you can't even suggest that you're going to do that, because even VCs in the top tier are not doing that right now. And they've got some track record in history.
But,
right.
You go through one of these deep pandemics and crises, and before, sometimes you will see the other side pop out really quickly, like a buoy out of water, and that is oil went pop. Now, I did not expect that. That is pure luck. I could not predict that.
Right.
That was just a hedge that the world has gone too far. And in the housing crisis, it was picking the banks that were more responsible, doing good underwriting, actually using paper and pen,
right.
not digital automation. And they popped.
Right.
The wins happen fairly quick because the stock market usually is ahead of the game to some extent. But remember, the first news is sometimes the best news, and maybe it's time to, make action. So, yeah.
Well, I'll make one parting comment about Silicon Valley that I've observed over the last 4+ decades, and that is that when I started, the view was, if we can make you 3 times your money in 10 years in a venture investment, you should be pretty happy compared to what you would do, say, in a bank deposit or something that's sort of normal. And then it shrunk to, we're going to be trying to make 3 times your money in 5 years. And now it is what you just said, which is, I want you to make 5 times my money in 3 years, which is really hard for most people who are founders and operators to imagine doing, because it takes a year just to figure out whether there's a market that you can fit into. And a lot of experimentation that's going on, a lot of failure. Hopefully the failure is happening fast, but you can't speed up some of the stuff that has to be done. It takes years, and sometimes even more than 10 years. I mean, Microsoft didn't go public for some 10 years. I want to say Apple took at least 7 or 8, if I remember, because I was at Davis, Stafford, Kelman, and Fenwick, and they started Apple Computer. Jobs and Wozniak walked in broke. I tell that story on other episodes. And, the short answer is those companies took a while to get to the point to be a public company. But today, the set of expectations is just off the charts. And maybe we're going to have a reset. I mean, the happy ending to this, if there is a happy ending, is everyone's exaggerated set of anticipated outcomes may get reset. And maybe that's a good thing. Maybe there's sort of a certain creative destruction possibility here that, there's a lot of broken glass, but you know what? We're going to have to figure out how to make more durable glass, and it's not going to break as easily. Now, we say that all the time when there's a crisis. We said that in 2008. And here we are 15 years later and saying it again. So maybe it's wishful thinking, but hopefully we'll see people's expectations change, and for the better in a good way. So thanks very much, Will, for coming on. I'll look forward to talking to you more. I mean, we'll watch this crisis together, and I'll be now paying attention to your Twitter feed for other related topics that we can target, and then I'll send you the links to this stuff so that you can send it to your clients, and hopefully they'll enjoy it as much as I have. So you take care. All right, talk to you later. Bye-bye.
Tune in next time on The Valley Current.